In this presentation, we will continue on with our comprehensive proprietorship problem, recording the last transaction for the month, which will be on January 31st. For more accounting information and accounting courses, visit our website at accountinginstruction.info. For the owner draws. So this is the last transaction for the normal transactions of the month, so we want to make sure and enjoy it here because we don't have any more that we get to do after this. But after this, we will be going to the adjusting process, creating the financial statements and the closing journal entries, so there is more to do, so don't worry. We're going to have the owner draws here as our last transaction of the month. Now, draws is a little confusing because one, we don't see the draws account often. It's a little bit different than most of our other accounts because it's in the equity section. And like I said, the transaction doesn't happen all the time. So it actually can be a bit confusing to know the draws. So what is a draw? What happens here, of course, if this is a business and it's a sole proprietor, we're going to say that we hope that we put this money into the business in order to help us generate revenue. As we generate revenue, we, of course, will hopefully generate cash. And then we're going to want to take that money out of the business at some point in time to spend on our personal uses. That's what the business is for. So we want to make sure to keep the business separate, and therefore any expenses we have, any personal payments we have, the best thing to do would be to take the money out of the business and then make the personal payment from our personal finances. And so that's what we're doing here. We're going to draw the money out of the company. So in essence then, of course, the cash, our first question, is cash affected? Yeah, because we're going to take it out of the company, give it to our personal owner, who will then use it for whatever they want to do. It's not a business expense. So we are going to say that the cash is going to go down. Cash is a debit balance. We're going to do the opposite thing to it, which is a credit. So copy cash. We're going to put that on the bottom. So remember, we're not working top to bottom, debit to credit. We're working whatever easiest to do. Cash, easiest to do all the time. So there's cash. We're going to indent it. It's already done for you, most likely. I'm going to do that by going to the Home tab, Alignment, and increase the indentation. We will be in the credit side in cell J24. I'm going to say negative 1,500. Then we'll debit something by 1,500. I'll do that with a little formula of negative of that number. Now we just need to know what the debit will be. And we can see, of course, it says draws here. So that's going to be the debit. The more confusing thing, of course, now is that we need to, what is draws? I mean, notice what draws is kind of acting like an expense because we're paying cash and we're debiting something that will affect equity, but it's not in the expense area. It's going to kind of act like an expense in that it goes up with a debit, in that it's kind of like a contra equity account, meaning if we look at all of equity, all the blue accounts, credits win. Credits are going to win. So the draws then being a debit balance as our expenses, but draws more particular because it's actually in the equity kind of area here, is a contra equity account. It's going to bring down equity. And what that represents, this capital account you can think of, and total equity in whole, as if it was all one number, as it will be on the balance sheet, is what we owe to the owner in a similar way. We can think of it as a similar way as what the business owes to like a vendor. For what we purchased. And when we pay the vendor cash, then what is owed to the vendor goes down. And that's the same thing's happening here. So the capital account represents what's owed to the owner in a sense. We're going to put the draws and decrease it by what we paid to the owner. We're going to do so instead of hitting the account directly, as we did here, by breaking it out to a new account so we can see exactly how much was drawn throughout a particular time period. So that's what the draws account is going to be. Also note that if an owner decides to pay money for personal expenses and let's say not draw the money out and just spend the money for something personal like a personal dinner or something like that, notice what happens there. That would record an expense, probably for like meals and entertainment, increasing the expense, decreasing net income, rather than taking it out in the form of draws and not affecting net income. That will distort our performance of how we think we did in our business because the personal expense would be mixed in with the business expense, which is what we're trying to avoid. Okay, so here if we do that, we're going to say that the draws is going to be the debit. So I'm going to right click and copy that, put that up top in H23, right click and paste 1, 2, 3. Okay, so let's record this. We could do this once again by making things really small. I'm not going to do it that way, but you could zoom out if you wanted just to show you and post here. I'm going to go back up to 130% and use those frozen panes. So we're going to scroll up top. I want to get rid of column A by going to the right so that G is flush. Go to cell K1. That's where we want to freeze the panes. Go to the View tab. Go to the View tab. And then the Windows group and freeze the pane. And then freeze the pane. And then if we scroll to the right, we have frozen panes from G to J. That's what we want. If we scroll back down, we see that we're looking for draws. Here's draws on our last journal entry, the one we will be working with. Here's draws on the trial balance. It's going to be in the same order. It's our second equity, second light blue account. Going to the right, we've got assets, we've got liabilities, and then we've got the equity. There's the draws that we want. We want to be on the first cell here in the debit side in cell AE9. Scrolling back down, we can see the draws here. That's the one we want. We're in cell AE9, where we're going to say equals and scroll down just a bit, point to that 1,500 and enter. And there we have it. So there's the draws. If we go back to our account, if we click to the left of the frozen panes and go right, there's the draws. So that of course brought down the equity here to 98,500, but did not affect net income. That's the point. Okay, so here's the cash side. Here's the cash. So that's our first account, the second half of our journal entry. First account on the GL as well. So we're going to scroll down and here's cash. We want to be on the credit side. So we're here in P19. Within P19, we're going to say equals and point to that 1,500, bringing the debit balance of 37,600 down by 1,500 credit to 36,100. If we scroll back to the right, we can see that 36,100 up top. We can see we're back in balance. And what did this do? We brought down cash. And we decreased the equity section, but did not affect net income for the amount that the owner drew out of the company for personal, not business usages. For more accounting information and accounting courses, visit our website at accountinginstruction.info.